presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Let's go to John in Orlando. John, what's going on, brother?
Good afternoon, Tom. How are you?
I'm doing great, man. Yourself?
Good. I want to tell you, I've been listening to you since your radio days back in '99. Appreciate what you guys do. But what I really enjoy that you brought back Tim Ord. This guy is as smart as a whip.
I am so happy for that feedback.
Yeah, because he's one of a kind. He's got to be the number one market timer. I'm telling you, it's like he called it really, really good.
He does. I really appreciate the feedback, man.
Yes.
Now, Tom O'Brien.
What's going on, everybody? This is Jacob Shoup. You're watching the Tom O'Brien Show. Don't have the camera on today. Man, just unrelenting movement to the downside. Today, a lot of stuff happened. It doesn't look like we're getting a bounce at all. Let me just make sure I'm accurate on that. Yeah, no, not at all. Yeah, that early morning kind of sell-off, but it wasn't so exaggerated. And we've continued to move to the downside. Looking at 556 in the SPY. Trading off 3.44%. You get the composite off about nearly 5% at 17,298. Give me 1 second here. We're working on getting Steve Rhodes onto the show. Yeah, the Dow Jones Industrial off about 2.7%, 41,000. I mean, guys, this is some major selling. You're taking a look at the composite. I mean, let's look at NVIDIA off 6.35% at 105. This is a major movement to the downside. Everything is getting repriced, both in terms of market sentiment and then also as far as your big named analysts are concerned. You get the Dow Jones Industrial off about 2.69% at 41,648, with those Russell futures off about 3.5% at 104.03. DXY ticking up just a little bit at 104.03. So, I mean, the question really remains, why invest in equities right now? People looking for, listen, you can get momentary bounces and everything like that, but the macro condition is what's in play right now, okay? And so the question is, why invest in U.S. equities? And at least for the near term, there is no reason to do so. At least I see it, right? You have this trade war ramping up. Okay, you have issues now where, we're slapping these tariffs on Canada. They can raise our electricity prices. They're threatening to. They have a new PM, Carney, who's a banker, Bank of Canada, and I forget the other place, but, guy who knows what he's doing in that realm at least. The whole, or at least a major portion of Trump's kind of platform is lowering the price of energy so you can lower inflation. The whole idea, what he wants to do is get these interest rates down. He needs the real rate down. He needs that 10-year down. It is a major thing for him. You have repricing of debt, or at least refinancing in June. You also have that with commercial real estate, which is a major systemic issue for a lot of these private equity groups. Of course, if you're looking at, I don't know, let's say like your big broker dealers and everything, they have 12% of their portfolio in that. Of course, your regional banks have a huge amount of exposure to that. These are all at major risks right now if these interest rates don't go down. So I wonder if we're almost seeing, in a weird way, some kind of Volcker V2, right? Where we just need to, now it's not the exact same thing because of course he skyrocketed interest rates, but this idea of just stuttering the economy in a major way to try to kill this, what we're seeing as inflation, and really an impact of inflation, which is going to be those higher interest rates. He needs those interest rates down. Of course, it's not a one-to-one, but this idea of just shock freezing the market and the economy to try to achieve some kind of economic end here. You have crude oil continuing to come down, of course, 1.82%. I mean, man, if those energy does go up, I mean, you can start looking at things like Duke Energy, my personal nemesis, only because, I don't know, I pay them so much money every month. Let's see what else we have going on. I mean, everything's red. I mean, what do you want me to say? You know, Tesla off 15. Wow. I started another short position in Tesla. My price target for this guy right now, and again, you know, I mean, what a beautiful, you know, short that was, right? We're looking at this thing at like 350. Okay, we're looking at earnings. We were short into earnings. Did a massive gear up on earnings. I said, that makes no sense whatsoever. This has gotten worse for them business-wise. It has gotten worse for them macroeconomically. Yeah, it can come down. I mean, 220. If you ask me today, you're going to have Tesla off. The only thing that I will say is this eroded far quicker than I'd ever anticipated. So you're off 15.78% today at 221. My price target for this is going to be 180. I think we're moving back down towards April. In reality, nothing needs to be having a PE at this level right now. Companies that are even growing, right, are getting shredded. Okay, that have growth in their forward guidance. Maybe it's not as good, but they have growth in their forward guidance. They're tempering that because of the, you know, uncertainty with Trump. They're getting nailed. I mean, look at Nvidia. Now let's consider an equity that, based on earnings, is not growing, is contracting, data coming out that less people are buying their car, and we have a PE higher than that. It doesn't make any sense. This continues, in my opinion, to go back down. I mean, I'm looking at 180 in the near term in April for this equity. I don't see what improves fundamentally for Tesla. People are scared of equities right now. People are uncertain of the US market. They're pulling that cash out. They're going into money market funds. If for whatever reason this gig doesn't work in June and we can't reprice or refinance, I guess, at lower rates, then I think you get into an even more terrifying situation. Maybe you start seeing gold become more appealing. Now, I mean, chances are that if this market continues to tank and we start getting, you know, worsening economic data, meaning worsening for the average person, which is actually good overall because that will lower interest rates and you free up capital flow that kind of way, just by the nature of lower interest rates, you know, that will probably not occur, right? But if it does, for whatever reason, you know, you get into a whole new world of hurt where we now pay more, right? Private equity groups can't really borrow against anything to add more capital into the market. So this is just it's not very rosy looking right now. You know, I think people also are kind of reviewing what this whole Trump plan is. You know, like it or not, the way that we've been running things since World War II is like a hydra. You know, we have our, you know, all of our heads in multiple different countries, whether that's politically, economically, culturally, and that has played in our favor for a long time, right? We are undoing that kind of hegemony right now. So we'll see kind of what happens. I think people are starting to kind of realize that as well. And what does that look like? What does a U.S. stock market look like when we don't have that global influence? I don't know. Folks, stay right there. We'll be right back.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Welcome back, everybody. Jacob Shoup, you're watching the Tom O'Brien Show. Looking at Palantir off 11%. Again, I mean, this is the same kind of sentiment I have with Tesla. We'll talk a little bit more about that. But first, it is a Monday, and you all know what that means. And if you don't know what it means, that means we are joined by Steve Rhodes. Steve Rhodes is the author of the Mastering Probability newsletter. He's also the host of the Trader's Edge on at 11 a.m. Eastern Time every day that the market is open, right here on TFNN. Hop over here. This is the Mastering Probability newsletter. This is an extraordinarily thorough newsletter. You're going to get a lot of what you're looking for in that. Additionally, we love having Steve come on and give his analysis. I want to say as well is that Steve really interacts with the viewer. So if you have not checked out his show at 11 a.m. Eastern Time on TFNN, strongly recommend doing so. He takes questions, he looks at the equities you ask for, and it is a fantastic time. It is interactive. Strongly recommend checking out both Mastering Probability newsletter and his show, The Trader's Edge. Steve, how are you doing?
Checks in the mail, Jacob. Checks in the mail.
Thank you. I was working on it in the mirror, Steve.
I love it. So why don't we just jump right in? Because obviously there's lots of fear in our listeners out there, potentially, unless they're short. And let me just kind of go through slowly, what the charts are communicating to us. And the first chart that I wanted to look at is the monthly time frame for the S&P 500. And the top portion is price. The bottom portion is a tool that shows consecutive closes higher and consecutive closes lower. I'm going to show you what's going on in both sets. Let's start with the top panel. You'll see a green squiggly line on there. That green line is it's green or red. At this stage here, it's colored green, and that's referred to as the oscillator and change line. Now, when it's green, it tells us that the price oscillator, that's the difference between the 19 and 39 period exponential moving average of price, is above zero. When that's above zero, markets are considered to be bullish. Now, if we take a look at price behavior, and unfortunately I had to, because of computer issues, I'm showing you this in PowerPoint, so I can't point exactly to the month, but it looks like back in July, maybe of 2024, was the last time that we saw a close below that red oscillator and change line. Now, what we also saw once price gave that up, if you look down below, you'll see we ended up with 3 consecutive months to the downside. So we're below the oscillator and change line right now. Odds last month was, even though it was a small lower close out there, we actually made a higher high. We made an all-time high last month, and then it was just really a doji style candle. So it wasn't anything significant, not like this month. So if we look at prior consecutive moves to the downside. The last one, as we just mentioned, was a 2-bar move. The one before that was a 2-bar move. One before that was a 2-bar move. One before that is a 2-bar move. Most moves in bullish markets tend to be 2-bar knee-jerk reaction lows. So what that says is there's the potential in the month of March for there to be a bottom. Mm-hmm. But I would also say it's 2 to 4 bars out here. We see mostly 3-bar moves. In fact, I don't see any 4-bar move going back to 2011. So that's 14 years out there. Just 2 or 3 month moves to the downside. Any questions about that?
No. Please keep going. This is interesting stuff.
Perfect. Okay. So this suggests a 2 to 3 month move to the downside, with the emphasis right now perhaps on 2. If we go take a look at now, that was just I had blown up the S&P 500 so
right.
that folks could have a decent understanding of how to use those tools on my chart, and then what does that mean for the rest of the cash indices out there? Well, you can see we really have the same basic setup. The Dow is below its green oscillator and change line. The NDX 100, the same thing. The Russell as well. The semis have been below the oscillator and change line for months out there, but just been trading sideways. So we've got that same condition, generally speaking, overall for the markets. You can see last month was bar number 1. That's the red numbers on the bottom portion of each of the charts that you're looking at. So a 2 to 4 bar move to the downside, knee-jerk reaction low, is very likely unfolding as we speak right now. It's consistent throughout the charts. And that says price is likely to pull back to support. So I want to kind of start moving towards a support thought process here. And this is the S&P 500. We look at the S&P 500 a different way. Yep. And this here, you'll see these red horizontal lines. Those red horizontal lines are what we call horizontal trading ranges. It turns out, it was taught to us by a guy named Bud Rolfs, goes back 15 years ago. Here at TFNN, and what this is doing is this is identifying the largest number of co-located opens or closes. When I say co-located, it can be either an open or a close of a candle. It's also where I say the body of the candle is really truly the essence of price, not necessarily the wicks of the candles. But that's a different thing. So what this does is this automatically goes out there, identifies the largest number of sequence of co-located opens and closes. Then identifies the second largest, and that becomes the spacing. Once you have that identified between every price level that's added here. So there's equal spacing. Somebody can do the math on it. They'll see it's going to be basically exact out there. Now, what's interesting about and then I've also got in there rising price channels. So I have a rising price channel. If you take a look at the green lines, that starts back at the lows for 2009. And once that created the bottom. Right. Once you are able to identify a top, which is the dashed green line out there, that also gives you the price distance between high and low. And so each of those other diagonal lines, the upside, were established by what was created at that bottom line area. Here what we see is in the S&P 500 found resistance at 6102, and right now is testing support or maybe just slightly below support at 5630. If price moves down from there, the next level of support would be the green rising price channel, probably around the 5500 type area out there. But nothing has really been broken just yet. And all the moves that we're looking at, just kind of normal out here with regard to moves to the downside. So that's the cash indice for the S&P. This is the same set of charts except for the Dow. Monthly time frame chart shows the rising price channel, shows the horizontal trading ranges. The next potential support level for a horizontal trading range for the Dow is at 34,934. And if we take a look at the NDX 100, we can see, again, same set of charts out here, rising. This also shows the rising price channel off of the 2020 bottom out there. Those are these dashed green lines out there. So these all become potential support areas. The next one to the downside of the NDX 100 would be 18,099. This chart here, at least as of 15 minutes ago, what we look at is the second from the bottom panel. That's the advanced decline oscillator. And that's established by taking a look at the difference between the 39 and 19 period moving averages of the advanced decline line. That's the second section out here. When this gets to minus 150, we were at minus 145 about a half an hour ago. That tells us we are getting into oversold conditions. Yes. The type of oversold conditions to expect or anticipate some type of bounce or bottom. Now, the market can get more oversold than this, but we're now entering oversold territory. A lot of discussion, right, about the Trump tariffs and what might all that mean, and what's that mean for the market. Well, let me tell you what it means for the spot VIX index or the VIX index traders out here. They're saying this is a short-term event.
Okay.
How do we know that? Well, if we take a look at the spot VIX index, again, a snapshot from about a half an hour ago, you'll see that's trading at about 28.01. Down below here, I've got all of the forward future contracts taking us out to November of this year. Take a look at the price point. This is contango. This is not a normal, natural way that the VIX trades out here. This is all short. Look at here's the March volatility. So you're at 2450. Come all the way back to November 2025. You're at 2067. All the forward future contracts are trading below the spot VIX. That tells you to really expect and anticipate quite a rally. I'm not saying that it's the bottom. But this is so important to understand.
Steve, are you able to stay right there into the next segment? Please do.
Can do.
Perfect. Folks, stay right there. We'll be right back with Steve Rhodes after the break.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
This year has already been a wild ride for the market. We started off heavily in the red, traversed back to all-time highs, and we now have a trade war looming. Trying to play this chop as an individual trader leads to death by 1,000 cuts. Where does this market go next? Should I add to this position or cut my losses? Where is the next opportunity? Tariffs, trade wars, analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento for the second and fourth Friday of every month for 3 hours of live trading. Larry has been through many markets just like this one, and the insight he provides is invaluable. The dates for this month are March 14th and 28th, 9 a.m. to noon Eastern Time. Get in here and let's start trading. TFNN, educating investors.
This portion of the Tom O'Brien Show is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, everybody. We are joined right now by Steve Rhodes, author of the Mastering Probability newsletter, host of the Trader's Edge on 11 a.m. Eastern Time, right here on TFNN. Steve, before we went to the break, okay, you're looking at some stuff here. This is really interesting. But the data you're looking at, you might be seeing the potential for a bottoming or a bounce going on. Could you explain that? Maybe go over it, briefly one more time and kind of expand upon it.
Sure. So there's the VIX offers a number of really great tools to help us interpret what the markets are doing. The one that we're using right now, and people will get focused on, they hear what the spot VIX is and they say it's 28, and they think it's elevated and all that type of stuff. But what they're not doing typically is looking at what the future VIX contracts look like, because that's really important. If, for example, this was going to be a sustained move to the downside, yes, you would not see, for example, the May VIX trading at 2162 with the current VIX at 2450. It doesn't work like that. This is a gigantic, huge contango. Again, this is telling you, this is all short-term issues, right? What we're seeing here in the market, now, as you know, things can change on a dime.
Yes.
But right now, we've got to interpret the charts, the messages based upon the information that's provided to us. So we know a couple things. We know that we are approaching the oversold market condition using the advanced decline oscillator tool out there in the minus 150 level. So that says, okay, be on your toes. Then we take a look at spot VIX index and see that 1 year out, there's a tool that they provide. 1 year out for the spot VIX is trading at 2393, and we're at 2801 today. Gigantic percentage. Now, speaking of percentages, there's another great second use for the spot VIX, and that's called the one-day rate of change. And that's the very right column out here. Now, look, when I took this snapshot half an hour ago, it was at 1985, a 19.85% one-day rate of change. I don't know where it's at right now. But what I do know is if the one-day rate of change is about plus 10%, that's another element to suggest that we need to look for at least some type of short-term bottom. In that case, typically overnight, I would say it either starts usually around the Asia session, around 8, 9 o'clock, or maybe it's the European session, of course, daylight savings time. You got to figure out all the hours on that one. So that's a spot VIX. Sure. This line here, remember we've talked about how when major market tops form, it'll do so for all international, for the major primary international instruments. Yes. This is a snapshot from a half an hour ago. Look at the center chart. That's the DAX. Uh-huh. The DAX was at new all-time highs on Friday. Yep. Out there. Yep. It's hardly budged. It's not suggesting anything like 2000 or 2007, at least not just yet out there. So that's another piece of information to take a look at. Now, when I take a look at the equity future contracts, these are the daily equity future contracts. The green lines, the green horizontal lines here are weekly profile levels. And I'm showing here on the ES Mini both the center and the bottom. When the top was way up here, I didn't want to really cloud up everything. Price is pulling back into a very strong level of support. No guarantee that it's going to hold, but 55.96 to 56.37 is a very strong area of support. In the case of the NQ, it's between 19,191 and 19,392. So those two instruments are getting back to strong support levels. We'll have to see how they're handled. In the case of the Russell 2000, you can see an A to B equals CD pattern to the downside. That's completed the 1-to-1 price objective. It'll continue to move lower, but a bullish reversal candle would confirm a buy the D point pattern. In the Dow, the Dow out here is below support. I don't have any on this set of charts here. I don't have any support for it. But that doesn't mean, you know what? So I was running into those system problems. Some of those other charts didn't. But here's what I can do. I've got another game plan. Let's do this. I've got a game plan which says let's go take a look at this chart right here, which is the S&P 500. Yeah. So I can't go back to do the Dow, but let me try to give you some ideas also with regard to the S&P 500 out here. On a weekly time frame, those system problems, they really kind of screwed things up. On the weekly time frame, what we were looking at is a consolidation. And right now you can see we are trading below that consolidation. This is a weekly chart. So it doesn't necessarily matter what it's doing on a Monday. It matters where it closes on a Friday. But right now, let's assume that we're going to break the consolidation. If on Friday, this is what the candle looked like, what you would do is you would basically get a consolidation measured move. And you could take that consolidation, you move it towards the bottom of the consolidation, and that tells you about where you're going to go target. interestingly enough, on a weekly time frame, the level where price broke out from is at 53.2437, right to the T. How do I know that? Well, that uses the TD9 count system to identify where price breaks out from and where price breaks down from out there. So it's a very objective level. It's not something that Stevie created or tried to teach you anything. All I have to do is teach you the TD9 counts, and then you'll be able to identify where these levels of support are. So in the case of the S&P 500, in lieu of any kind of other daily bottoming signal forming out there, this says, so I want to be clear on what I'm saying. We had those other charts that suggest anticipate and wait, and that there's likely to be some type of rally. I still believe that. But then on the larger interpretation, I don't know that the rally's really over. And in fact, not until the monthly time frame chart were to get above that oscillator and change line at 58.85 would I be comfortable in saying that. Or if we got a 2 to 4 bar move to the downside on the monthly time frame chart as we're getting bottom signals on the daily and the weekly. I hope that made some sense.
Yes.
To just kind of takes things one step at a time. If I were to look at if I go down and take a look at if I take a look at the intraday charts here for the NQ. So this is interesting. And again, we're looking at the daily charts at the bottom portion. We got the 10-minute, 15, 30, and 60. So I want to give a real play-by-play here. And here on the 10-minute time frame chart, Tom's favorite time frame, by the way, this formed a Rhodes momentum indicator bottom pattern at 330. And price right now is taking on profile resistance. It's a little bit of a sell zone. It's a 10-minute chart. This pattern is going to this bar is going to complete in 2.5 minutes out there. And if it closes above 19,477, that says that it should rally even further out there. In the case of the 15-minute time frame chart, a Rhodes momentum indicator bottom pattern, both of those being confirmed by bullish reversal candles. In the 15-minute, it was a three-river morning star pattern out there. You can see the 120, the 240. They've got Rhodes momentum indicator signals. Those need bullish reversal candles to confirm some type of intraday bottom. The reason I've switched over to this is we're looking for consistent bottoming signals that spot VIX one-day rate of change above plus 10%. You want to find on some type of time frame, whether it's 30 or 15-minute time frame, where each chart has a bottom signal, and then the market should rally from there. But this may not take place, folks, until the real overnight hours, which might be around 2 or 3 in the morning.
Fantastic. And folks, this is why now is a fantastic time to check out this newsletter. I mean, Steve, I'm definitely going to be following along on this, right? I mean, with these kind of conditions are hit, and say we make a legitimate, technical bottoming pattern, I mean, hey, you've kind of got to reposition yourself and see what happens. Thank you.
Absolutely.
Do you want to look at Tesla?
No, that's okay. That's okay.
Fantastic.
Set up for
well, then let's look at it tomorrow at 11 a.m. Steve, thank you so much for coming on.
You got it. Take care.
Folks, there, I'll be right back after a very short break.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
Welcome back, everybody. Jacob Shoup, you're watching the Tom O'Brien Show. We just had Steve Rhodes on again. Check out that segment we have. We're gonna have that up for you on TFNN, right on YouTube at the end of the show. I really want to say now is such a good time. If you're really just finding us, I know we have a lot of new viewers because of everything going on in the market. This is a great time to check out Mastering Probability. One of the things I want to say is that you can do this risk-free. We have a 30-day money-back guarantee on all first-time subscriptions to any newsletter we have. So you can check these things out risk-free. All you do is go ahead and buy if you want to, for whatever reason, get your money back on it. You just email me at jacob@tfnn.com, but I'm betting that it's going to work out quite well for you. Let's take a look right now what we got going on. Obviously, this is Tesla. You had some recovery, at least in the SPY, just for a brief moment, and we are ticking back down now. The volume was a little bit, let's see. I mean, looks like we're probably going to have equal volume from Thursday and Friday today, finishing down. I do think in the short term, the equities will continue to fall. I think definitely these higher growth stocks, quote unquote, will continue to contract quite a bit. I mean, definitely Tesla, definitely Palantir. You're definitely seeing a repricing right now. I can't right now see what the rotation is. I think everything is just has so much energy to the downside right now. I mean, looking at NVIDIA off 5.16%, you have so much red. Your banks are red. Anything that got these massive pops in December and November, I mean, this is giving back the Trump rally and then some, right? And it's kind of what we were looking at to occur. Are we at a bottom now? I think maybe in the overall market, you might start seeing some reduction in the sell-offs of everything, but certainly, NVIDIA is still at 36 PE. Okay, the growth is there, but not as extreme as people anticipated. Obviously, you have HPE. They just kind of really screwed it pretty heavily. You have Oracle coming up. I mean, CrowdStrike wasn't good. Oracle's coming up. If Oracle is bad in any way, it can even be growing. Right, and if there's any reduction in target, which you have to consider, these companies have to consider that we might head into some difficult economic times, and so you slice that. I mean, this can plummet even further, and that will take a lot of the market with it as well. Intel trading off 3.46% at 1992. I think Oracle in and of itself is somewhat higher stakes than other earnings because of its investment in what is it called, the Stargate project with OpenAI. You're deflating this AI bubble in a major way, so much so that even data centers, which I still think have a very strong kind of bullish argument for them, because these things aren't going away, whether that's for AI or just anything we're doing. if Oracle says, hey, it's not going to be as strong as we had initially thought, or maybe this year is going to be a little bit weak due to other kind of conditions, I think absolutely that equity tanks lower. But I think the market does too. And I'm not sure we're out of the woods yet, because I think the uncertainty is still there. And until some of that uncertainty resolves, you can then start really seeing some meaningful flow back into equities. But as it stands now, this is all going to be money market funds. We have Oracle off 4.6% right now. So we'll see what happens after earnings. Other earnings today, you have Franco-Nevada. I think that was in the morning. I'll take a look at that. See what it did. You have UEC coming up, which I think probably off 4.61%. Is that aftermarket? Yeah, I mean, you're pretty low right now, but I don't think they're going to have anything fantastic to say. I think there's still a long time for uranium to get ramped up. If you want for a long-term hold, uranium no doubt is going to play a much larger role in our energy portfolio, but this is looking out quite a bit. And it's the same thing with Oklo, right? I mean, I think Oklo is going to suffer the same issue. This would have been so beautiful if we did get those puts around 40, but we'd not. You're off 10% at 23.65. Of course, your major, if you just look at the chart, kind of your area resistance is at $20. But again, I think even this is unsubstantiated. You're at 2.8 billion market cap. Something along this $5, $7 level makes much more sense for something like Oklo. So we'll see what happens. They have earnings again the middle of this month. Let's take a look at Nebius. I think this is still an attractive opportunity here. You're at 26. This actually is recovering today, at least from the sell-off earlier, but you're still very low. I still think this is very attractive. I think they have great exposure in Europe for data centers, and they're not necessarily a data center company, but they're a compute rent company. I believe they will be dominant. They have a lot of cash. They don't need to borrow anymore. They're really starting to get the ball rolling. Of course, they have access with they have exposure with AV ride to electric vehicles. That is still dominant in Europe, even though it's slowing down here a little bit. Yeah, I like Nebius. I don't think conditions have gotten necessarily worse for Nebius in any way. And expanding into New Jersey, even if America has some uncertainty in it, I do not think is a bad thing for Nebius in any capacity. So I might be looking, I have been adding slightly to Nebius, but just for the sake of my portfolio balance, I probably will not add more at this level. Now, if this cranks way lower, to 20 or something, I will absolutely be buying more Nebius. I still like this equity quite a bit. Let's see what else. I mean, you have Trump coming out and saying you can't watch the stock market, right? Says we're in a transition period for the economy, didn't rule out a recession. I think that's freaking everyone out in a major way. Consumer credit is increasing, rose to $5 trillion in January. You have, in the past few quarters, seen an uptick in credit card loan delinquency, although that has ameliorated slightly in Q4 in 2024, but we're definitely going to be looking to see what happens in Q1. I think there is some major cracks showing, and that just doesn't make me feel confident for a lot of the market. And I think a lot of the, I think people who have a lot of money, move into money market funds and take out. This is what we saw in 2022. So until things kind of improve, and if Trump says, hey, you know what, this is fine, we're gonna resolve these kind of tariffs. I don't see things improving, and I don't see a bunch of capital flow back into the market. This is a period of change. The market is trying to figure out what is this going to look like over the next 4 years. And this is certainly, in my opinion, not a time where you say, hey, we figured it out. We're dumping in a bunch of capital into either just the equity market itself or certain equities. I don't think that happens. And in the near term, I mean, earnings will play a heavier role. So definitely be following Oracle. Yeah. You have Russia surging because Trump might reduce some of the tariffs. This is a really big pivotal change. I think we'll probably, remember this for quite a while to come. Tesla trading off 15.46%. You have the SPY off 2.62%. Composite off nearly 4% with the Dow Jones Industrial trading down nearly 2%. Folks, stay tuned. We'll be right back. Very short segment.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, everybody. Jacob Shoup, you're watching the Tom O'Brien Show. We have a short segment left here. Some more. I was reading an article too, and it's like, and listen, I'm not, saying these things like politically at all. I think that this impacts the just economy. It does, but even this, I think what it shows is that we are in for a period of kind of an attempt to slow down and contract the market, the economy as well. But this headline is Trump rejects pleas from businesses for more clarity on tariffs. Quote, they always say that. I think there's this, listen, I don't think, maybe he's doing this because he has some evil intention. I think we're in territory that we probably haven't been in, at least with how the leader views America's place in the world and how we should do things. This is kind of like maybe newer territory. I mean, certainly for me, you have the SPY trading off 2.63%. Seems like we got a little bounce off the bottom today, but there is some kind of fighting there, a little bit of resistance, that 562 level. Definitely following Oracle for today. Tesla, again, I'm really looking at like a 190, 180 price target for Tesla. This PE needs to have more downside. This 109 is still, this is extraordinarily overpriced, right? And when you get labored just market conditions, that's where the PE does come in. You've heard me say, like, in a lot of ways, PE doesn't always matter, right? Certainly when you have high growth, the economy's pumping on all cylinders, there's tons of money flowing in, PE can have some leeway maybe, right? Have some more acceptance at higher levels. When you're seeing people tighten the belt, these high PE start to become extraordinarily unattractive. And people ask, hey, why am I still buying at this level? Why am I still holding something at this level? Certainly when you get earnings that say, hey, we're not even growing. China also having some issues. We'll see if the stimulus takes over. Some of your Chinese equities have come down a little bit, not the cars. Folks, thank you so much for joining me. See you tomorrow morning, 9 a.m. Take care.